Tip number 1, trading mechanically is questionable.
Right, okay, these are my top 10 tips, basically, for how to make money from trading. So my top 10, your top 10 might be slightly different. So first one is trading mechanically. I do have a bit of an issue for a lot of retail traders trading mechanically. So trading something which is a specific pattern, let's say, where they have to take every signal in a pattern, because as you know, as soon as a mechanical type of system like that or strategy falls over and has a drawdown period, the trader starts to then second guess, oh, should I stop trading it as soon as they're in a drawdown period, or is that drawdown period actually going to be something a lot more prolonged and they should actually stop it entirely? It's very, very difficult for a trader to follow a mechanical system. For that reason, I think that that's my top 10 tip number 1. I think for most traders, trading mechanically is very difficult.
Okay, all right. Number 2, use multiple time frames plus setups.
Yeah, the multiple time frame analysis, I think all traders should embrace that. Top-down approach. Whatever your time frame you're trading, whether you're a day trader or whether you're a swing trader, you should be using a top-down approach. Look at the higher time frames first and then condense it down to the lower time frames. You'll get a much better read on the market rather than trying to have this blinkered singular time frame approach, which lots of traders do have out there. So they should incorporate that. Then you can put a strategy around that, read the markets first of all, then employ the right strategy at the right time.
Okay, so the hourly chart says buy and the 5-minute chart says buy, and then you buy.
Yeah, basically, yeah.
All right, vary position size.
Yeah, I know, this one's, a lot of people are not going to like this one because this is something I do, which is to vary my position size. But a lot of people have this approach, well, you should risk 0.5% per trade of your capital. Whereas for me personally, if I look at a trading setups, you can't always have exactly the same sort of setup which you feel that you have the same confidence on. So some setups I still want to trade because they might have a fantastic risk to reward, but I know that the win rate on that strategy is probably not quite so good, but it's worthwhile trading. So I'll actually downsize my position size on it, but if it pays out, then it'll still have a great risk reward on it. So I vary my position size, and I would encourage people to do
that. Actually, this is the best of the 10, in fact. I think that's the best idea of the 10, because you want to be in the market, but you think it's really risky, selling a spike or buying a dip, etc. And in fact, you find that if you've got a toe in the water, you read with that, which doesn't cause you stress, you can read that position and read that market much better. Even if it's just a 10 pence a penny or whatever it is. So that's I think.
Yeah, but you're not connected to it. If you're not in the trade, then you have no emotional connection to what's going on in that market anyway. And if you're in at full position size, you're too emotional.
You're sweating away, yes. And, and all the other things people normally have, from what I see, people have position sizes which are 2, 3, 4 times bigger than they should have for that account size and for whatever they're comfortable with.
Yeah,
and
exactly.
Being over leveraged is actually the number 1 cause of a downfall. And